the FX drivers are so many, and then they're changing very quickly. So at some point of time, they might have been true, but given what happened since early May, dollar maintained the weakness, or exceptional strength has moderated, maybe that's a better way of putting it. And then at some point, despite the U.S. rate going higher, so that decoupling between U.S. interest rate and the dollar, the value is quite new phenomena, which is not really technical. And going forward, maybe foreign investors maintain their exposure to United States. That we keep hearing that they might consider hedging their dollar exposure or dollar asset exposure to the extent that the exceptional strength of dollar might not continue going forward.
I'm glad you brought that up because, I mean, if you do believe that most of the weakness in dollar is because of hedging, the flip side of that is that it means that interest in U.S. assets, and specifically here I think it's about the indirect bid, whether there's enough foreign appetite or demand for U.S. treasuries, whether that is fading or whether that is continuing. We'll have to wait and see what the tick data says, of course, but what sort of sense do you get?
Well, those people who look at the flow on a timely, real-time basis continue to believe that the foreign exposure to U.S. Treasury has not really declined on net, but more of the movement away from longer term, which is more risky, and to a short term rather than selling off across the curve. What has happened since May was that foreign investors, especially European investors, begin to believe that the premium on U.S. equity might be a bit excessive, given what's happening with the politics, policies, and also the tariff-related distortion. So therefore, they continue to like U.S. equity, but they look at the prices rather than just the earnings, the outlook, to the extent that the exceptionalism of the U.S. might be a bit moderating, although still there.
Yeah, and Gohoon, in the end, what do you think this is going to really do, the mission of the Trump administration's tariff threats of it? Because some were saying that this could actually, interestingly, be a good thing for the Asian economy, forcing these countries to get their houses in order, boost investment, to boost the fiscal, and perhaps it could actually lead to something good like structural reform and finding better partners.
I think what you said makes sense. And then when you look at each of Asian countries, they try to boost the domestic demand, which is a good thing, and also try to boost the productivity through various measures, including Korea. And also cyclically, usually when dollar is weaker, then tend to support the Asian exporter to the extent that Asian export are denominated in US dollar. So as weak dollar boosts the US export, weak dollar also boosts the demand for Asian export as well. So historically, you can see very strong correlation and consistent correlation between dollar value versus Asian export, to the extent that dollar is not strengthening anymore or even weakening, despite this potential dollar boosting news. That actually should be good for also Asian export as well.